Boom! Hey yo, what's up, everybody? What's going on, guys? Welcome to the True Trading Group live stream. All right, we are here live now for the earnings from Microsoft as the stock is now reacting as earnings have just come out and the stock is giving you an initial reaction here to the upside. Earnings are a slight miss on revenue. Earnings are actually a slight miss on revenue. They missed, but barely. I mean, it's basically right in line with expectations. It's basically right in line with expectations for revenue. This is a warm, welcoming surprise, guys, from the earnings front. The revenues are $52.75 billion versus $52.94 billion expected. And the stock is actually moving to the upside. Earnings per share was a beat. They beat on earnings per share. It is $2.32 versus $2.30 expected. So I'm just going through these earnings as they're continuing to kind of come out here and dive into all the individual numbers. The initial reaction, the stock is up 4%. The stock was around $242. We are now up at $252. All right, we're at $252, breaking above some key resistance levels right now in the after-hours session on the back of these earnings for Microsoft. So we did want to come on here and talk to you guys here and go through this. Let me see what other numbers I've got here on this. All right, the Azure growth was higher than expected. I think that's maybe a lot of where this is coming from. That's the area that a lot of people were concerned about Microsoft's business. A lot of people are concerned about enterprise. They're concerned about software. They're concerned about those areas of the economy. And you're seeing a 31% growth. So that's slightly above the expectation for Microsoft. So Azure revenue growth is 31% versus 30.6 was expected. Revenue and productivity. Okay, so productivity and business process, 17 billion. That's up 7% year over year. Intelligent cloud, 21.5 billion. That's up 18%. This is good earnings, guys. You know, the main thing that a lot of people were worried about with Microsoft was that Microsoft was really going to give you that first mega cap tech earnings. Okay, that first mega cap tech earnings is what and people were nervous that these companies were going to. Oh, Texas Instruments is out too. Texas Instruments just came out, and Texas Instruments is a beat on revenue, slight beat on revenue, 4.67 versus a 4.62, and that's actually moving to the downside. I'll have to look a little bit further into Texas Instruments. Q1 4. Okay. Their guide is a little bit light. Texas Instruments guide is a little bit light. Their guide is 4.17 billion to 4.5. The expectations were 4.41. Earnings per share is a big range they're giving you, 164 to 190. Estimates are 187. And that stock initially traded to the downside. But the reason why Microsoft is up so much, guys, is that the areas of Microsoft's business that comes down to that enterprise, comes down to software, comes down to that the Azure, okay, Azure. I've heard a lot of people pronounce it different ways. I say Azure, but that was better than the expectation, and that was the main concern, right? That was the main concern. And now that comes out, it actually beats expectations. It was not a disappointment. That sends Microsoft soaring to the upside now, up to 253. You probably see Amazon. Yeah, that makes sense. You're probably going to see Amazon trade higher on the back of that because of Amazon's AWS, and there's a concern there with AWS for Amazon, and that's why Amazon is now ripping to the upside as well with Microsoft. It's the areas of the earnings of Microsoft that are really the reasons why we are trading to the upside on that name. That Azure was a big concern for a lot of people, and it kind of just put everybody's fears to rest. You are still beneath the 200-day moving average on Microsoft. Do not ignore this 200-day moving average. It's a major level of resistance. If you look back at the last two times you got to the 200-day moving average was December, it was a major level of resistance. You go back before that in August, major level of resistance at this 200-day moving average. The yellow line on my screen is the 200-day moving average. That is a major level of resistance for Microsoft. So what you're going to want to be watching for, if you are going to be looking for a trade on Microsoft tomorrow, okay, if you're looking for trades on Microsoft tomorrow, you need to be conscious of that resistance up around 256. Now that you're getting this move to the upside on Microsoft, Texas Instruments also just turned around. That stock moving to the upside. Intuitive Surgical came out, not as big of a component as Texas Instruments or Microsoft, but that stock is also hanging in there, trading into slightly in the green. So far, your bigger tech names, Microsoft still moving now. Stock's now up 5%, 254, 254.5 now, as you're still continuing to the upside. Guys, there's about 1,300 people that are on this channel live as we're breaking down earnings. Make sure you guys smash that like button, subscribe to the channel. I do these lives not just for earnings, folks. We are live 6 days a week on this channel, going over trade ideas, market commentary, trading with you guys live even. So you guys want to make sure you subscribe to this channel and smash that like button as Microsoft is now continuing to push the upside. But this is going to be that tough level of resistance. We have not been above the 200-day moving average since March. You got to go back to March since the last time we were above that 200-day moving average. That's a big level of resistance there for Microsoft. Mike, with the earnings coming out so strong, are you thinking that bear market anticipation is over? I don't necessarily think that bear market, the bear market anticipation is over. I just think that the timing of things is shifting. And we talked about this for the first couple of weeks of 2023. And I actually talked about this in my report that I issued for all TTG members. I issued a full report for my 2023 outlook. In that report, I very specifically said, a lot of people, including myself, going into the end of last year, was thinking about the markets crashing again in the first half of the year and then bouncing back in the second half of the year. And I was thinking about maybe by February or March that the markets would start to sell off. And that still very well could be the case. But the longer that earnings stay up and the longer that the labor market holds firm, which it is still holding very firm, even though you are seeing layoffs, the labor market will soften, but even though it's still firm. So as the longer that this holds up, then what you'll start to see is the markets move to the upside, being led by the exact same things that got destroyed in 2022. This is huge because when you come into 2023, everybody was positioned for the defensive play. Everybody was positioned for a recession and the crash. Nobody was positioned in Bitcoin, in high growth or high risk assets like the ARK names, the NVIDIAs of the world, the Snowflakes of the world, the Datadogs and the Splunks and all your big tech names. Nobody was positioned in those stocks, but those are the stocks that are ripping to the upside to start off 2023. Did you know that the worst three performing stocks in the Dow are the top three performing stocks in the Dow so far in 2023? Now, it's only January 24th. Does that mean that that's going to be the case for the whole year? I do not believe so. Okay? I do not believe so. But this is huge. For Microsoft to come out and say, hey guys, coast is clear, and then see the reaction that the market has on the back of those numbers, it shows you that you may see people chase tech. You may see people chase tech because everybody was coming into this earnings season expecting all of your big name tech companies to revise guidance lower and really say, guys, listen, even if we beat Q4 revenue, 2023 is going to be a disaster. We're going to move our guidance down. Everybody was expecting to hear that from these tech names, and Microsoft is the first one coming out, and they haven't said that. Are the earnings spectacular? No, they're not spectacular. Are they as good as they were in 2021? No. But when you're sitting here and you're looking at the numbers that are coming out, considering the fears and the pessimism that people had coming into this, why do you think the market was so quiet today? The market was so quiet today because everybody was waiting to see what Microsoft was going to say. Yeah, take a look. Snowflake trading now back over 150, right? Amazon getting a big bump to the upside, like trading to the upside. You see Amazon, you see Snowflake. Look at the stocks that are moving to the upside. It's all those software companies. It's that enterprise software. It's that spend. That's the area of the market that people are most concerned with. That's where Microsoft beat. Microsoft beat on the Azure revenue growth, and they beat on earnings per share. They actually missed on sales. They missed on sales and revenue, but it shows you what the market really is focusing on and what they care about. So the initial move is to the upside, but I still believe there's enough resistance up there on Microsoft that you got to watch those mid 250s. 255, 256. That's a tough level of resistance for Microsoft. All right, that is a tough level. Personal computing revenue, that missed as well. Microsoft Windows OEM revenue was down 39%. So there are areas of Microsoft business that are clearly slowing. But it's just not as bad as people had initially feared. And that's why your initial move is to the upside on Microsoft. Stock's trading up 4% right now after hours, which is not a huge move, but it's a decent move. So right now you're getting all your tech names are starting to get a little bit of a boost on the back of Microsoft earnings. And the market has survived step one of earnings. Market survives step one of earnings. Then tomorrow you're going to be getting Tesla. Okay, then as you get into next week, you're going to be looking at the Fed. Next week's going to be absolutely freaking insane. You're going to be getting Amazon. You're going to be getting Alphabet. You're going to be getting the Fed. All of these companies are going to start to be reporting earnings, and you throw a Fed meeting right dead smack in the center of that. Does the Fed give you 25% or 50 basis points, 25 basis points or 50 basis points? That Wednesday Fed meeting is going to be a massive market moving event. Telling you guys this right now, you may get some of the wildest, most volatile trading action that you have seen, and you're going to see all year when you get next week's Fed meeting on Wednesday. Absolutely unreal. So, guys, again, make sure you subscribe to the channel, smash that like button. We're covering earnings with you live, and now you're getting a little bit of a pullback off of that 200-day moving average. So we just talked about that just a couple of minutes ago, right? We said watch for that level to be resistance on Microsoft. And you push right up into it. You guys can see the tail up at the top. Tail up at the top, right at that 200-day moving average, acting as resistance, giving you a little bit of a pullback. All right. That's also a gap fill, which is the gap fills right back here from December 14th. And then prior to December 14th, you guys can see very clearly that level was resistance even prior before that. All right. So there you guys go. It's a big level there right at that 200-day moving average. And like I said, if you're just tuning in, you have the resistance there at the 200-day, and you have resistance up here at the 200-day. And I think that level of resistance is going to be very difficult for Microsoft to break. I actually would not be surprised if you push up against that level tomorrow, and then you possibly have a shortable trade off of it. Folks, we got about 1,500 people that are on the live stream right now. I just am curious, how many of you are not members of True Trading Group? Do me a favor, if you're not part of True Trading Group, just type the letters TTG. Just type the letters TTG if you are not a member of True Trading Group. I just want to see, about 1,500 people watching us live. I just want to see how many of you are not members. Don't be shy. Seriously, just go ahead and type TTG. We've got Don. What's up? Jonathan Wilson, welcome back, my man. D. Wayne Hamilton, how are you? Yeah, Microsoft still looks good. I'm taking a look around if there's any of the other earnings that came out that are really worth noting. The biggest ones that were worth noting, were going to be, was going to be Texas Instruments and Microsoft were the two biggest ones that I was really focusing on here. But the cloud is what it's all about, guys. I mean, they're even talking about it right now. And Joe Carner was talking about it on CNBC right now. Don't mind; these are all misprints. Don't worry about all these. The stock's not actually trading all the way down here. Don't worry about that. Stock right now is at 252. And here's that resistance level that we drew. That's actually the same line. It's actually the same line. So that's going to be the tradable level for us tomorrow. All right, that'll be the tradable level for us tomorrow. But notice how all the other cloud computing stocks are all moving to the upside. It's all because of the Azure revenue growth for Microsoft is up 31% when the expectation was 30.6. It's not a big beat, but everybody was scared that number was going to come in light. That's the number everybody was scared was going to come in light. So even though they missed on revenue and they missed on sales, and other areas of their business are slowing significantly, like 39% on Windows OEM revenue. Also a pretty big miss on personal computing. There it is, intelligent cloud revenue. When you break out the intelligent cloud revenue, a beat, 21.5 billion versus 21.44 billion expected. So as you're breaking out the cloud computing, the cloud computing, the numbers are pretty good. And that's why your other cloud stocks are moving to the upside, like Amazon, because of AWS. You also see Snowflake is moving to the upside as well. So a lot of these stocks were all red today. Amazon was red today. Snowflake was red today. Microsoft was red today. But now with Microsoft's earnings, they're all getting a boost to the upside. Snowflake, by the way, just for those that are maybe new to the channel, Snowflake is one of my favorite potential long-term unicorns. Snowflake is one of the stocks. So if you look back over the last decade or two, the stocks that generated the most amount of wealth for shareholders were your big tech stocks like Apple, Amazon, Alphabet, Microsoft, Meta, right? Those are the companies over the last decade or two that generated the most amount of wealth for shareholders. You are not going to get a 5,000, 10,000% gain from Apple going forward. But I'm looking for the next wave of those unicorn tech names. Snowflake is right at the top of that list for me. I love this company. It is, the stock itself is a little expensive as far as like if you break it down to, you know, PE and everything else. It still is an expensive stock compared to its peers. But sometimes stocks are expensive for a reason when it comes to valuation. You could have looked at stock. You look at Tesla. Tesla's been expensive for the last, 5 years, even longer. And the stock still just won't continue to go up every year. Amazon was the exact same way. When Amazon was a young company and a young stock, Amazon was always traditionally expensive compared to its peers, but that stock continued to move to the upside as well. I believe that Snowflake is also has the potential to be one of those type of companies that I plan on being a shareholder of Snowflake. I own Snowflake from about $117 in my long-term portfolio. If we do move lower this year, I would love for that stock to get to 100 or even lower. I would buy a huge chunk more. I really do like Snowflake. It's going to be in my long-term portfolio for the next decade at least. I'm going to be a shareholder of Snowflake. I really do love this company. So you're getting boosts on all of them. They're all these stocks are trading to the upside now thanks to Microsoft and their cloud results. But Microsoft is best in breed. Just because Microsoft's earnings are pretty good doesn't mean that all of your others are going to be pretty good. Microsoft is best in breed. But that was the hesitation in the market today. The hesitation was, well, if the best in breed craps the bed, then what does that mean for everybody else? That's why there was such hesitation in the markets today. That's why. Right? That's why there was such hesitation. I didn't even check the overall markets, actually. Yeah, the SPY gave you a little bit of a boost. SPY was red today. Now you're actually trading in the green, slightly in the green. Same with the NASDAQ. NASDAQ was red. Now you're trading in the green. So see, Microsoft earnings giving the entire market a bit of a boost. About $2 to the upside on the NASDAQ, just thanks to Microsoft. Right? And then $1.50 to the upside on the S&P, just thanks to Microsoft. Just thanks to Microsoft. Okay, that's kind of the bulk of earnings. So I'll bring on my business partner and co-founder of TTG. We'll bring on Adam, and he might ask a couple of questions based on some of the things that we have going on here. He always asks some really good questions. So I want to give a big shout out, a big AO to Adam.
What's going on, man?
What's up, bro?
That is massive, man. I really thought Microsoft was gonna miss pretty bad today.
So did I.
It looked like it too. It looked like it right before the market was closing, or right after the market closed. It kind of looked like it.
There was a lot of anxiety today in the market. You felt it. You felt there was a lot of anxiety today in the market. There was anxiety in Microsoft. Microsoft started to sell off right before the close. You started to get this downward action right before the close, and you see volume starts picking up. I just think people started to get just anxious, and they were nervous that Microsoft was going to miss. There was a lot of skepticism around Microsoft's earnings and the cloud business and the Azure revenue growth, and that would have said, is it Azure? I've heard it pronounced
Azure. It's not Azure. It's Azure.
Yeah, because I hear even on CNBC, I've heard people pronounce it both ways. But people were concerned with the revenue growth, and you would have seen if they missed on that revenue growth for Azure, you would have seen Amazon get hit, you would have seen Snowflake get hit, you would have seen all of those companies, all that enterprise software, you've seen all those companies get hit. So that's why you're getting this boost. Microsoft up 4%. Stock has seemed to have stabilized now, and I think it's pretty safe to say, because sometimes you wait for that, the initial reaction to earnings sometimes is not the right reaction, but it seems like the price has now really started to stabilize, and this is really good and healthy for the market.
You know what? I pronounced it wrong, I think. Hang on. Whatever. Sorry. You may have pronounced it correctly. Hang on.
Yeah, that's what I thought. Azure.
Azure. All right. Yep. No, I stand corrected.
Yeah. Now you're even getting CNBC is doing a poll right now that says, now after Microsoft earnings are out, are you more bullish or more bearish for the rest of big tech? And it's interesting. Mike Wilson, who is a chief strategist for Morgan Stanley, who is one of the most bearish analysts on all Wall Street, who actually has one of the lowest price targets for the S&P, is coming on CNBC in just a few moments. It's going to be interesting to see what he has to say as that tune. Remember we talked about on the live stream just the other day, Adam, about people's tone, and that tune is beginning to change a little bit. That narrative.
I gotta tell you, man. I mean, look, I know. Oh man, it's tough because every ounce of everyone's being believes, for very good reason, that we're going into a light recession. The markets are going to get lower. They're going to sell off. Earnings are going to be terrible, and things are going to get worse before they get better. That is what everyone believes in, or what most people believe in their heart of hearts, because that is what makes the most sense.
Mm-hmm. Yeah.
But I'll be damned if I'm not like, it sure don't look like it right now, you know?
Not yet. You definitely, you don't have, you have every recession signal that you could possibly have, but you don't have the recession data yet. You just don't. I mean, unemployment 3.5%. Yeah, that number will slowly tick higher, but unemployment's still 3.5 based on your last number. I expect a slight increase in that when you maybe back to 3.7 or something, 3.8, which is still insanely historically low. On your next unemployment number that does come out, I expect maybe 2 to 3 tenths upside on that. But you just don't have, you still have, GDP growth from the previous quarter. It's just not here yet. And a lot of times
funny is Mount Saint Funk is the user's name, says it makes sense based off of history, but not 2023. And that's interesting that I see that, because I saw an article recently, and I forget which big news network put it out, but the whole premise of the article was why this year and history is not going to, that was the whole argument of the article, was why that isn't going to be a good indicator for what happens in 2023.
Mm-hmm. Yeah. And honestly, I totally, listen, if you guys are new to the channel, my stance on 2023 has been, for the last several months, has not changed, that I believe that we're going to have a mild recession that is going to be short. It's going to be shallow, and if anything, it's just a reset, and it's a return back to a state of some normalcy from the craziness that's happened after COVID. And you're going to have, after this is all said and done with, you're going to, like, economics books are going to be rewritten, and we're going to look back the way that we look back now, and we're like, oh, well, remember 2008, or you remember inflation from the 70s, or, oh, you remember, like all these times throughout history where these like unique events have happened, and you look back and you compare to them, like 20.
I don't mean to interrupt you, just real quick. Did Microsoft put out guidance yet?
No.
Okay. Is that expected on the call at 5:30?
Possibly, but they may have decided not to issue guidance, which
How would we know that?
Yeah, they just don't issue it, and then you can see if they address it on the conference call. Apple has done that before, also, where they don't necessarily give guidance.
Okay. All right. I'm sorry to interrupt. Go ahead.
No, it's okay. So, sometimes companies don't do it. Like if they really, because sometimes they're just not comfortable issuing guidance if they just really don't know. So it wouldn't be out of the question if they opted to not give out any guidance. But yeah, when you look at 2023, like I can sit here and I can say to you guys, well, every single recession in history of the United States, every recession was preceded by one of three things: either a rate hike cycle by the Federal Reserve, an oil price shock, or an inverted yield curve. In 2022, you didn't get just one of those things. You got all three of them happen. All three of those things happened in 2022. So if we are able to avoid a recession with all three of those things happening, it would be the first time in history that it's ever happened. But at the same time, someone can say, well, you've also never had $9 trillion or whatever of stimulus injected into the economy. And that is also a true statement. So that's why nobody really necessarily knows. I saw an interesting study that was put out today that, did you know that out of all of the money that was given out in the stimulus packages, there was a report in a study that was put out that said only half of it has been spent?
Is that true?
It's a report that I saw today. Half of the money from the stimulus has been spent, which means you still have another half of that. And as people are starting to spend more money on credit cards, credit card debt is starting to really.
Do you remember where you saw that by chance?
Yeah, it was on CNBC today.
Oh, here it is. 1.4 million of 52 million stimulus. Oh, never mind. That's Saginaw Council. Damn it.
Something different. Anyway, whatever. That does, but it's just, you've never had a situation where the economy was shut down to zero. You had all that pent up demand. People were able to save a lot of money because they weren't going anywhere, and they were given a lot of free money. And is that enough? Is that enough to cushion the economy from not going into a recession after you had all three of those things happen? And nobody knows the answer to that question because it's never happened before. So everybody can give their best educated guesses, but call a spade a spade. There's not a single person alive today that can ever say, I've been through this before.
I bought rims.
You what?
I bought rims. I bought new shoes for my cars with my stimmy.
Oh, nice.
Yeah, I'm joking. So yes, I mean, man, I'm trying to figure out. Trying to think. I mean, what is it crazy at this point to think maybe somehow, some way this ends up in a soft landing?
Well, listen, it's always been possible, and I've never just shrugged off that. No, it's not possible. No, I've always said it's possible. It's just not likely. And listen, I mean, I do this for a living. I have to say this is what I think is going to happen. Like I have always, even when in September and October of last year, when it was like the world is ending, we're going to have a Great Depression, we're going to have 40% unemployment, where the whole economy is going to, and everybody was calling for the end of the world. I was like, no, you're foolish for feeling that way. I don't believe that at all. And some people are saying, no, we're not going to have a recession at all. Jim Liebenthal doesn't think we're going to have a recession. Tom Lee doesn't think we're going to have a recession. Analysts at Goldman Sachs
I don't know about Tom Lee. He's brilliant. I'm not taking anything away from Tom Lee. I think the guy is actually brilliant. But I don't know, man. He's a really over the top optimist.
Yeah, I mean, listen, going into last year, his end of year target was wrong. He has since adjusted his targets after he realized that the Fed was more aggressive than he expected them to be, and he adjusted his targets. And his targets are not out of whack right now. If there is not a recession, the markets will go to his targets. If you avoid a recession, this market would move higher if you actually avoided a recession. I just believe that the most likely scenario is going to be a very mild recession, and that resets a lot of asset prices and valuations. You have one more move to the downside in the markets. You trade the crap out of that move to the downside.
What would be the catalyst? I don't mean to cut you off, man, but at this point, assuming, because the market has priced in a lot of things, dude. It priced in, to my knowledge, the market has priced in anywhere between a 25 basis point or 50 basis point rate hike coming from the Fed, right?
Oh, yeah.
Okay, hold on. So then on top of that, that's priced in. They have priced in a lackluster earnings, or a crappy earnings for the most part from big tech. They're expecting bad earnings, right?
Well, I mean, the market's priced what the earnings expectations currently are, but the worry was that, well, but what if the companies
Right.
change?
What I'm saying is that there wasn't like this expectation that earnings were going to be the best year ever. Like everyone knows that earnings probably weren't going to be amazing this year.
Yeah, earnings estimates have already come down.
Bro, what takes us down
Oh,
fresh lows from last year at this point?
That's simple. That's the actual recession. You're not, there is no recession that's here right now. You can't have a recession with unemployment at 3.5% and GDP growth from the previous quarter of 3%. And, that's not a recession. So you just basically have this lagging period where the Fed raises rates. It takes a while for the economy to absorb those rates and for it to really filter through the system. And then usually during that time period, everybody anticipates the recession. It doesn't show its face. Everyone thinks you avoid it. And in reality, it's just that the recession was just a little bit further away than you had initially thought, which is what we talked about in the 2023 stock market outlook report, which was everybody's talking about the market crashing to start off the year and then bouncing the second half. But what if the earnings and the labor market hangs in there a little bit longer than people expect? That'll make people think the recession was avoided. Everybody chases the market higher. Everybody gets long. Then the recession shows its face and the market gets that rug pull. And then everybody that got caught chasing the market at 410, 415, 420, they get the rug pulled out and then we drop back down to 360.
So I'm just trying to figure out so you're saying unemployment would be the catalyst for that drop.
It would be a recession would be the catalyst, that earnings would decline and GDP growth would decline to go flat and then go negative. And then unemployment would rise by more than 100 basis points, which would be, so in order for any economist to label a recession, and this is why economists did not label a recession last year when you got 2 consecutive quarters of negative GDP growth. They didn't label it as a true recession because, yes, you had 2 consecutive quarters of negative GDP growth, but unemployment during that time period actually went down. And no economist is going to label a recession when unemployment actually goes down. So typically, economists are going to want to see 2 consecutive quarters of negative GDP growth plus a 100 basis point increase in unemployment. So if unemployment is 3.5, you'd have to get negative GDP for 2 quarters, and unemployment has to go to 4.5. Then you would get the label of a recession. So the actual recession, the market right now is not priced for a recession. So if a recession actually shows, you have another move to the downside. So it would just be earnings deteriorating, GDP going negative, and unemployment going up, and that would give you that's the catalyst for the move to the downside. It's not the Fed, it's not inflation. Inflation has rolled over, it's peaked, it's coming down. The Fed has done their job. They're 2 more rate hikes away from pausing. They're going to wait and see. They're probably not going to do anything. Once they pause, they probably pause in like May with like 20. I think they're going to do 3 more 25 basis point hikes. Maybe they give you a 50 basis point hike this meeting and a 25 next meeting, and then they pause. You're going to get, I think, 75 basis points more of rate hikes. Then they're going to pause, and they're going to pause for the rest of the year. And then at that point, the Fed's going to wait and see. So now that the Fed's paused and inflation's coming down, nobody cares about inflation in the Fed anymore. Now it's all going to be about recession or soft landing, and do we actually avoid a recession, and do you have the soft landing? That's now you're talking about like the IMF, the Fed. You're looking at all these people now. They're talking about expecting for 2023 like just barely above 0 GDP growth. Like the expectation now amongst the Fed and the IMF and some other major economic organizations that are on a global scale, like the IMF, or like the World Bank, not just here in the US, but like on a global scale, that the expectation for GDP growth is just above 0. So if that actually happens, if you get GDP growth just above 0, then you avoid a recession, and that would be a soft landing. It's not impossible, but when you look back at every single rate hike cycle in history, the Fed has only been able to orchestrate a soft landing about 20% of the time.
So, but maybe the Fed doesn't need to orchestrate it here. Maybe there's a lot of other contributing factors. So maybe it doesn't, maybe this is the one time it doesn't all rest on the Fed.
It's not when we say the Fed is orchestrating the soft landing, it just means the Fed has raised rates to the right number.
Right, but what I'm saying is that they probably have a little more leeway here because of all the stimulus that was pumped into the economy, because of the why that's because of the pandemic. There's such a high growth rate of people going back to work and built up stuff.
Yeah, no, you're not wrong. 100%. But
yeah, now Jane Funk is correct. The rates were zero when they started the rate hikes.
Right, but the point is that you're not wrong with what you're saying, but that argument can be made for both sides. Like, just as you're saying that, yeah, but they've got all this strength, they've got all this stimulus, they got everything that happened because of COVID. But that's also the same reason why people say, but that's why inflation's not going to come back to 2%.
Yeah, I'm not saying that we are or are not going to have a recession, right? What I'm saying is that there's a lot of things. We can say that for the first time in history, or limited times in history, but the fact is that there hasn't been a time like this in history before. We are basing all of this on what was the norm, and this is, although similar, is very far from normal. Mm-hmm. So so when any other time, it would solely be based on Jerome Powell and the Fed hitting that number perfectly to avoid a recession and go into a soft landing. There's a lot of other factors at play here that maybe you don't need the Fed to hit that exact number this time around.
So here's yes, and I'm just this is just coming across our Benzinga Newswire right now. So for those that don't know, when you guys join the True Trading Good platform, you get Benzinga Pro's live news feed in their Squawk Box. And this is coming across our wire right now that Texas Instruments, which was the other company other than Microsoft that was reporting earnings today that I really cared about, a statement being issued from the company. Texas Instruments says in the first quarter they expect a weaker than seasonal decline, with the exception of the automotive business. The stock is not even really reacting negatively to that comment. The stock is flat. You're right around where you were at the closing bell. So the stock's not really having much of a reaction there, but that's the kind of stuff that people are looking for. They were looking for Microsoft to say something like that. That was the worry, right? And then as you're getting into Alphabet and you get into Apple and you get into all these other companies, they're scared of those companies saying something like that, which means that the CEOs are seeing the demand, they're seeing their sales, they know their customers, and they're saying, we are seeing a slowdown that concerns us. That's what people are worried that these companies are going to say. Microsoft came out right now, did not say that. That's why the stock's up 4%.
I also think Microsoft, just a brilliant move investing in OpenAI. What a move, man. I mean, I know Google has their own AI, and I know that Amazon Web Services, AWS, they have their product as well. But there's a reason that OpenAI is getting a lot of attention, man, and it's not because of Microsoft. It's because of what they have done as a company, and the fact that Microsoft, really just, in my opinion, they really skipped the line. They really skipped the line there, man.
So what is it? ChatGPT.
Yeah. So ChatGPT is a product from OpenAI. It's based on a ChatGPT is the model of AI that they're using. They're using a ChatGPT model. It's based off of something called, I think it's called Da Vinci is what it's based off of. But the technology behind what they have done is unbelievable, man. I mean, this technology is so new. It's so, I mean, like it's almost it's too new for you to even comprehend what is coming down the pipe in the next several years.
Yeah. It's just unbelievable. They hit
honestly, we're playing around. Everyone's playing around with a chat app right now. But what this actually turns into is something insane. And honestly, if Google does not step up with their AI, because right now ChatGPT from OpenAI does not give real-time information. So you can't search for something looking for a real-time result, right? There are plugins or extensions on Google Chrome that will have ChatGPT to search the internet and enter that into their info. If Microsoft incorporates something like that with Bing, bro, I don't know what Google does. They're going to have to step up whatever it is that they're working on pretty quick. Last thing I heard about Google's AI, I'm a beta tester for some of their AI products, for some of Google's AI products. It's cool. Some of it's cool, but it ain't that impressive, bro. Not like OpenAI. One of it is like, oh, we can, give us a topic, we'll write you a story. Very basic stuff when you're looking at what OpenAI has created. It's going to be interesting. Somebody says, what does this have to do with the market? Absolutely nothing. None of these companies matter. All right, so let's talk about something that does have something to do with the market, huh? Where is the opportunity in this market right now? What is the short-term opportunity? What is the long-term opportunity?
Everywhere, man. It's the best trading environment that I've ever seen in my entire life. I feel like on a daily basis, you're getting just tremendous, from an active trading standpoint. And when I say active, I don't mean, sitting in front of your computer all day long. I just mean, from a day trading or swing trading perspective, not just like passively investing in your long-term portfolio, but actively moving, money around and buying and selling different things at different times. This is the best environment that I've ever seen. It was the case in 2022. It has rolled over right into 2023 with a ton of volatility so far in the month of January. And right now, with what you're seeing so far right now with earnings, and again, I talked about this in the market outlook report, that it's entirely possible that this market pushes higher. And that this market initially, as people get very excited that earnings have held up, that unemployment has held up, that all like Fundstrat is on CNBC right now, and it says that they believe that the market low is already in place. So Fundstrat does not believe that we are going to break beneath this low. This is Fundstrat. Okay, so they're on CNBC right now talking about this. Okay, so that's what Fundstrat, they believe that your that low is right there in place, but the opportunity is literally in this market every single day, every single industry that you look at. Like you look at yesterday, yesterday with NVIDIA, look at the moves that some of these stocks are making. Like this was NVIDIA yesterday. And we were going to talk about this yesterday on our live stream yesterday. And we were talking about a bunch of other things as well, but this was just an 88 or 90% gain for people just yesterday in one single day with just NVIDIA. Then you're talking about, we've already had a bunch of triple digit gains so far this year. We had the United Airlines short up against this resistance level. Yet, all these different industries. Look at this resistance level on United Airlines. It's clear as day. You don't need to be like a master trader to identify that level as resistance. And we shorted it on this day when you had the earnings gap up, and we caught an over 100% gain on those put options. Then you had the end phase trade, where that thing broke out. Broke down and just absolutely cratered a couple of days ago. Look at these moves that these stocks are making. You have large cap stocks that are moving like penny stocks, and it's in all different areas or all different sectors. I just showed you 3 different stocks in 3 completely unrelated sectors: the solar sector with Enphase, semiconductors with NVIDIA, airlines with United Airlines, right? Like Bitcoin is back in play. So Coinbase has been going nuts. Block has been coming in and adding to the party. It's like anywhere you look, there's opportunities in this market. In the meantime, while all these large caps are going crazy, you've got small caps that are lighting up the board. BIAF today, just an absolute freaking monster. Everybody knows about the GNX short squeeze that's been going on for the last couple of days. Like all of these stocks, it's like, it doesn't matter where you look. And this is not necessarily normal. Like, normally you need to be a good trader. Normally you need to be able to identify and find those opportunities. In this market, it doesn't matter where you look. There is an opportunity in every single corner of this market. Whether you trade small caps, mid caps, large caps, stocks, options, crypto, futures, whatever you trade, there's opportunities in this market. Everywhere. Every single where you look, there's opportunities. That's not normal. And as if that is not enough, you have a Fed meeting next week. And you have more earnings from big mega cap tech companies next week. Look what the markets just did right now with Microsoft. What do you think is going to happen when Amazon, Apple, and Alphabet report? What do you think is going to happen when NVIDIA reports? And then the Fed meeting drops a 50 basis point hike on you. This market is insane. There's so much opportunity. I got to be honest with you guys. I don't really, trading in a group has never been more important. And I've been doing this for a very long time. And trading in a group, okay, so you have a true trading group. We've got thousands of people that are inside of our chat room with us every single day. And probably about 6,000 people come in and out on a daily basis. Unique people that are coming into the chat or being on our mobile app. If you're not in front of a computer, we have a mobile app that lets you follow along with everything that we're doing inside of on your phone. And it's not just about myself or the other moderators helping members make money. Members also help me make money. Members bring setups to my attention, that's why it's so important for you guys to be in the right group where I can't look at 1,000 different stocks. I can't. I physically can't look at 1,000. I can't look at 100 different stocks. But as a group, if a group knows what to look for, actually knows what to look for. I'm not talking about, oh, look, the stock's up 20%. Oh, look, people are talking about it on Reddit. I don't give a damn what people are talking about on Reddit. If you actually know what to look for, if you actually know the difference between an A setup, a B setup, a C setup, you understand the quality of the setup and the probabilities that go along with that type of trade, it's going to be very hard for you to miss things. And sometimes in a market that's this active, people can get overwhelmed. They're running around like a chicken with their head cut off. They can't focus. They need to, like a racehorse, they got to put the blinders on so they can just focus on what's in front of them. And being part of the right group can help you focus and identify the best setups that are out there in the markets. True Trading Group members know what to look for. They know what to look for because we have trained them what to look for. They're learning the exact same level of education that I learned that I worked at the fund in New York. For those of you that don't know my background, I started working at a hedge fund in New York City as my first job right out of college. And I had to go through a 3-month educational training program when I worked there before they let me touch a dollar of their money. That is how I became the trader that I am. I didn't just figure this stuff out all by myself. I was taught. So that same level of education is what True Trading Group members receive. And that's how they're able to identify these different setups. We've given them all the courses. We give them all the tools for one very simple price for the whole year. There's no upsells for courses or tools. They have access to all of it when they join the TTG platform. And members, as a result of that, the vast majority of them, the reality is they're making money and they're becoming better traders. You don't have to take my word for it because I understand my word probably for many of you, if you're not a member of True Trading Group, my word probably doesn't mean anything to you, but don't take my word for it. I'll actually prove it to you rather instead. Guys, if you're a member of True Trading Group, do me a favor. Just type the $ right now if you're making money, you're becoming better traders because of True Trading Group. Just type the $ if you're a member and you're making money, you guys are becoming better traders. Go ahead and type the $. Now, anyone that's not a member, I would advise you just to try to count how many people are about to be typing the $. These are people that have all the same excuses that you've had. They have small accounts. They had full-time jobs. They lost money in the market before. They had no experience. But here they are now telling you that they're making money. They're becoming better traders. They're not smarter than you. They're not luckier than you. The only thing that they have that you don't is an actual, real education, access to real tools that successful traders use, that gives them more information, that helps them make better decisions. And they're part of a community that genuinely gives a damn whether or not they succeed or fail. You're talking thousands of members in 100 different countries around the world. If these people can do it, so can you. So, and all these people that are typing the $ are not bots, my friends. These are these are real people. These are real people. All right. Made the money for the membership and still not done with training yet, just off of the few things I've learned so far. Monty Deuce, hell yeah, man. Hell yeah, that's music to my ears. That's the stuff I like to hear. You've already made back your membership fee. So I guess you don't qualify for the double your money back guarantee, my friend. So for those of you that don't know, when you guys join True Trading Group, we offer a double your money back guarantee. I stand behind the platform that we've created. I see the results that members have, and I have no problem saying if you join TTG, if you go through our courses, you pass our quizzes, if you attend one of our study groups and you still are unable to make back your membership fee, if you're not able to make it back at least once from the membership, I actually give you back double your money. Rican says, I tried to learn on my own. I lost 10K. I joined TTG in December, already gaining confidence, and I'm green on the year. Yes, Rican, that's what I'm talking about, man. That is what I am talking about. Hell yeah. It's not, listen, trading's not easy, but it's also not rocket science. Okay. I will not be getting back no money either. Yes. I love it. I love it. You know, like I said, trading's not easy. Anyone that tells you it's easy is lying to you, but it's also not impossible. I mean, all these people that are on this live stream are proof that it's not impossible. It's amazing when you actually get a real education, you know, the impact and the difference that has on your trading. There's a lot of members in your trading group that are here now that, you know, a lot of members that are on this live stream even now that lost a bunch of money in the past or trying to do something on their own or following a bunch of idiots on social media. And, you know, didn't think that they were going to be able to do this. And now once they got a real education, they're actually become consistently profitable. And some of them have actually gone on to trade full time and actually quit their job. That's the goal that everybody strives for, right? True financial freedom, like working for yourself, your labor, making you richer, not somebody else. It's everybody's goal when you get involved in the markets. And a lot of members of the trading group have been able to achieve that goal. So it's not impossible. Members of TTG, just type the number 1 if you guys have been able to transition to a full-time trader. If you are a full-time trader now, thanks to True Trading Group, I want you guys to type the number 1 in chat right now. Show people what's actually possible. Now, this isn't going to come overnight. It's not going to come with zero effort from you. You want something that bad, then you better be willing to put in a little bit of time, energy, and effort. And when I say time, I don't mean 30 hours a week. Give me just a couple hours a week. Go through the courses, spend some time with us in chat, join the workshops, do the after hours tutoring that we have available. Like, actually utilize the platform that you are subscribing to, and you guys can actually see what's possible. Obviously, you're not going to see as many people type the number 1 as you saw type the $, but showing you that these are real people in TTG that have gone on to become now full-time traders. If they can do it, so can you. It's possible. You just have to arm yourself with the right tools. And Twitter and a free Discord and Reddit are not the right tools. There's not a single professional trader that makes money on a monthly basis, that does this for a living. There's not a single one in the world that gets their trading ideas and their trading signals from Twitter or Reddit. There's not one. So why are you doing that? You need to be using the things that give successful and professional traders their signals, which are all of the different tools that we have on our platform. I know all these things are important to people, but they're expensive. You know,
all right. Hold on one second. I hear you, but I just have one question for everyone in here. All right. All of this is great. I got one question for everyone on here. All right. Very simple. If you're not a True Trading Group member, non-TTG members and non-TTG members only, non-TTG members only, do you want a free annual membership to True Trading Group? If you do, type TTG in chat. Non-TTG members, do you want a free annual membership to TTG? If you do, type TTG in chat. Let's see what we got. We got Marco. We got Dean B. William. Yuka Frita.
Yuka Frita. I love Yuka Frita.
Ryan Hong. Ballsack skin. Oh, wow. There's a lot. A lot of people want a free membership to True Trading Group. And why wouldn't you? All right. So here's what I am going to offer everybody that wants a free membership to True Trading Group. Here is what you need to do right now. Okay? You're going to open a new browser window and you're going to go to the website ttgtree.com. That's TTG3 spelled out.com. You're going to enter your first name, your email address, your phone number, You're going to sign up for our 7-day trial. Now, that's a full 7 trading days. Weekends and holidays don't count. You sign up today, and you get a full 7 trading days. So day 1 will start tomorrow, and then it will conclude 7 trading days after that. Put in your info, select whatever the CAPTCHA says, then click yes, I want this. The page will load to an application. We have, Joe will fill this out as I'm talking. We have an application because we want to make sure that the right people are signing up for the right reasons. This is, we're not looking for people that just want to capitalize on on alerts only, that want to put forth zero effort, that are only out for themselves, that don't, we want people that want to be a part of a community that want to make a little bit of an effort, right? So
we also want people that are serious. Like we provide a lot of personal, individual, one-on-one mentorship and extra tutelage, and we want people that really take this seriously in order because it's not just myself. There's 9 other professional traders that do mentoring and tutoring with all of our members. So we want to make sure that you guys are serious about this. That's why you guys got to fill out this application.
Once you fill out the application, you will click submit. Most of you are going to be just fine. It will approve it. For those that don't, maybe give some thought to your answers and circle back. Again, the trial is $3. It is just $3. That is a one-time payment. Mike, tell them why we charge $3.
It's just to make sure you're actually a real person, so people don't come in and just start like spamming our chat. We maintain, a very high quality chat. There's thousands of people inside of our chat every single day. So we maintain a very high quality chat. We want to keep it that way and maintain the integrity of that chat. So we're not just going to let people come in there for free and just start spamming a bunch of crap in our chat. So it's all about quality with us, folks. It's quality over quantity. And again, that's why we charge $3, just to make sure that you are a real person. There's no automatic upgrade. There's no automatic renewal. There's no recurring payment. It's literally one-time fee.
Yeah. So when the 7 days is done, your membership just cancels. You don't have to cancel it. There's no auto renew. There's no upgrade, nothing like that. It just expires. You never pay us another $1 again. All right. As part of the trial, you will get access to Benzinga Pro's real-time news feed, 3 sample courses, TradingView, premium charts, real-time data, and everything else. Now, once you get to the final checkout page, make sure you enter your information, your name, your email, phone number. You're going to create a username, a password, enter your payment details, and just check out. All right. It's very, very simple. And then right after you're done, you'll be redirected to the dashboard. On that dashboard, you will see a tab that says mobile app. Click that tab, watch the 1 minute and 27-second video. It will save you a bunch of time and a ton of frustration. Watch the 1 minute, 27-second video, pair the app to your phone, and make sure that you are with us tomorrow, because at tomorrow at 12 p.m. Eastern tomorrow, any person that signs up for the trial tonight, I am going to do a giveaway for a free membership tomorrow in chat. So at 12 p.m. Eastern tomorrow, anybody that signs up for the trial tonight, be in chat tomorrow, and I will give away a free membership tomorrow in chat. Now, I'm only going to give away one, so for those that don't win, I'm also going to go ahead and give you guys an insane discount on an annual membership plus some pretty crazy incentive. So either way, it's going to be a massive win-win. You don't have to take the offer. And if you don't win the annual membership, you got 7 days to trade with us. That is a huge win-win.
Yeah, guys, especially considering that the Fed meeting is Wednesday. So that's within your 7 days. It's 7
right.
trading days. So you'll be with us for Wednesday, which is going to be the craziest day. You guys, I'm telling you, jump on, go to ttgthree.com right now, guys.
Yep, just go fill out the information, and then let's move on, Mike, and we'll start shouting out people that join the trial. Okay. All right. So let's Joe, just go ahead and start announcing trials as they come in. I see a bunch of them are filling out the application. We had 84 people just filled out the application.
Wow.
Yeah. All right.
Everybody likes free stuff. Good luck, guys. I wish you guys the best.
Yeah, but remember that free membership comes with a free laptop as well, so good for you. All right, now, what do we got earnings-wise tomorrow?
Mars Tesla, bro.
I know that. It was a setup question. Go ahead.
Oh, tomorrow.
This is why you'll never host your own podcast. Go ahead.
Tomorrow's Tesla. Tomorrow's ASML, Abbott, NextEra, AT&T, IBM, Boeing, ServiceNow, ADP. You got Lam Research, Freeport McMoran, General Dynamics. You got a Hess. You got a lot of earnings tomorrow, man. Obviously, Tesla being the biggest. We'll talk about Tesla earnings. We'll talk about the Tesla earnings. Now, listen, I got to be completely honest with you guys. I don't trade earnings because I think they're coin flips. The biggest loss of my entire career was actually thinking that I was psychic and I can predict what a company's earnings were going to be. And from that day forward, I vouched to myself that I was never going to position myself fully ahead of earnings again. So I'm not going to position myself for the actual earnings that are Tesla, but I actually think that there was so much negativity on this stock, and there was all this talk about a slowdown. But with the slowdown, they did their price cuts and then saw this massive jolt back in demand. And with China opening back up, you may get more demand coming out of China than people were expecting. And I just think that Tesla might surprise people. I feel like Tesla might surprise people. I think Tesla can come out with the earnings. The stock's at $165 like after earnings, and it just kind of shocks the hell out of everybody. And the stock just kind of rips itself back up to like here. You know, like I really feel like something like that is very possible tomorrow for Tesla. But again, I'm not, that does not mean I'm getting long it. I'm actually out. Okay. I'm actually out of my Tesla trade. I got long Tesla on January 6th at $108. We got out up there in the 130s just the other day. And stock now currently trading 144. We'll see if there's a little bit more movement there on Tesla. But, you know, that's going to be something that we're going to be paying attention to. And I think Tesla is going to be a big taker for consumer discretionary, right? Consumer discretionary is an area of the market that if you do have a recession, then the consumer discretionary sector suffers the most, because consumer discretionary are companies that sell goods and services that you do not need, but you want. And when you go into a recession, everybody cuts back on the things that they want, and they only buy the things that they need. Things that you need, those are consumer staples. That's, you know, the Johnson & Johnsons of the world, the General Mills of the world. Those are, you know, like, you know, even though you're in a recession, you still got to buy food, you still got to buy toilet paper, you still got to buy lotion and toothpaste and Tylenol, right? You still got to buy all of those things, even when you have a recession. Those are consumer staples. When there's a recession, you don't need to buy a new car. You don't need to buy a new watch. You don't need to go on vacation. You don't need to go out to eat dinner. Like those are consumer discretionary items. So Tesla is a discretionary item, right? You're buying a new car. So,
all right, real quick, sorry to interrupt you. We got to welcome Chad and Tracy. Chad and Tracy, welcome to the trial. They're our brand new trial members. Remember, you got to go to ttgthree.com. That's ttgthree.com. Enter your first name, your email, and your text message. Mike, I see your comment. You said 80 people filled it out, so why only welcoming 2 people, though? That's because they are still typing in their information. All right?
Okay, cool.
Thanks, bud. Enter your first name, email, and phone number, and then select, yes, I want this. Okay? At that point, you'll fill out an application. All right? And you'll fill out that application. And then you'll go to the checkout page. You'll enter your name, email, phone number, create a username, password, pay the $3, and check out. Again, it's a one-time payment of $3. After you pay that, you are never, ever, ever charged again. It is non-auto renewing. After the full 7 trading days, it simply expires. All right. And remember, anyone that signs up tonight, we're giving away a free membership tomorrow at noon in chat. Everyone else that does not get that membership, we are giving you an insane discount to join the family for the year. And at the worst case scenario, you spend $3 to trade with us during the Fed meeting next week. All right, get your butts in chat. Go ahead, fill out that application. Sorry to cut you off. Go ahead.
That's really that. So that's kind of that if there for Tesla guys. You know, I think Tesla could surprise some people to the upside, but it's going to be something I'm going to be looking at very closely to be trading after they do come out their earnings, because Tesla is a fantastic trading vehicle. It's a very volatile stock, and there's a lot of room and there's a lot of range on it. And I think there's going to be really good trading opportunities for it. If you do get upside, off of their earnings, you got to be careful though once you get into the mid 160s. Mid 160s is where I think you encounter your next big level of resistance. And I'm drawing it out on my screen for you guys right now, and you'll see this used to previously was a little double bottom support level there for Tesla, right? Was a little double bottom for Tesla. And then when you look back here, it was that previous pivot top from 2020, right? So those like 165, 166, that zone on Tesla is a tough level of resistance. So if you do get upside on the back of earnings, I'd watch for that level to be resistance, and that's a good place if you're long to be taking profits off. All right, so that is Tesla. You also have a handful of.
Sorry, 1 second. We got to welcome Marco. Marco is the newest trial member. They're starting to come in. We got to welcome Marco. Marco, welcome to the trial. We are now 88 people filled out the. Oh no. Sorry, 87 people have now filled out the application. Yeah. If you're having any trouble on the checkout page, make sure that you go ahead and send a text message to 786-505-4049. That's 786-505-4049. If you were a previous trial and you are legitimately interested in figuring out if we can make this work for you as an annual member, send that text message. We'll whitelist your email. We will give you another shot. 786-505-4049.
Welcome all of our new trials, guys, and good luck on trying to win the free membership. Right now, it looks like you have a 1 in 87 chance of a free membership. And then, like I said, there's a lot of great trading action here this week coming up, the rest of this week, and then also next week. So next, we've got this ASML. All right, this ASML is another one that's going to be reporting. This is a semiconductor, so this is going to be important here. You just had Texas Instruments report. That's a semiconductor. That stock's flat. NVIDIA's running like crazy, right? So NVIDIA's running like crazy. You haven't got earnings from them yet. ASML, though, could kind of set the tone for the semiconductor space. And as semiconductors go, as does tech. And as tech goes, as does the market. So when you get into these semiconductor earnings, they are very important, because they really impact the direction of technology, and then technology being the largest sector of the S&P by weighting greatly impacts the overall market. And obviously the tech heavy NASDAQ also greatly gets impacted when these tech companies really start moving around. So ASML tomorrow is one that we're going to be paying attention to. Support level for ASML is going to be 600, flat, sexy number, 600. That is this gap fill, and that is the 50-day moving average. That blue line on your screen is a 50-day moving average. That is a beautiful level of support. And then an even bigger level of support is as you get down here to around 525, 530, that zone right there on ASML. Why is that? 100-day and 200-day moving average, previous pivot low, and then also that big gap up. So you got the gap entry, previous pivot low, 200-day, 100-day moving average. These are your two major support levels for ASML. So watch that one off of earnings. Resistance level is going to be up here at 700. Real nice big whole numbers for the resistance and support levels here for ASML. And where are we getting that from? You have to go back here to the left. You see resistance back there in March. And prior to that resistance in March, it was a beautiful level of support for ASML. And that's where now you go back even further. You see more resistance there. And that's how you guys are looking at that resistance at 700. We got to welcome Dino. Dino, welcome to the trial member. Good luck. Dino, welcome to the trial member. Guys, again, if you want a shot at a free membership to True Trading Group, Join our trial membership, TTG.com. It's only $3. It's a one-time payment. One-time payment. We charge $3 to make sure you are, in fact, a real person. All right. And then don't forget that trial is 7 trading days. So the weekends do not count against your 7 days. You've got earnings, and then you've got a Fed meeting on Wednesday. And if you guys join us today, you got a shot at a free membership. Even if you don't win the free membership, we'll give you guys one hell of a crazy ass deal if you do want to join the TTG fam full time. Otherwise, you've got the whole 7 trading days to trade with us, the whole fam, all the TTG mods, and use our platform and experience what it's like to be part of the family for a full 7 trading days. So go to TTGTHREE.com. After ASML, we've got Abbott Labs. This one's not as important. I'll skip that one. Next Era Energy. This is a company that I own in my long-term portfolio. I actually bought this company back in June as part of my recession resilient portfolio, and it's been a fantastic winner for me so far. We got to welcome Greg. Greg, welcome to the trial. Everybody welcome Greg to the fam. So this is a utilities company, Next Era Energy. They actually own the Florida Power and Light. They are a fantastic company. They pay a beautiful dividend, have some good dividend growth. You have a monster support level down around $70. If this stock gets down around $70, in my opinion, it is a fantastic buy down there in front of 70. You can see a massive level of support down at $70. So if you drop anywhere near that on earnings, I think it's a good buy. And then you've got the flat top, you got this resistance area here. That's your all-time high resistance. And I think with a good earnings report, this thing can give you a gap up. And if you get a gap up on good earnings, that could give you some follow through that could see this stock up at all-time highs within the next couple of months. That is Next Era Energy. Then you've got International Business Machines, IBM. This is really just more of a sentiment type play. IBM has been a complete dog. I mean, this stock has literally gone nowhere in 2 decades. So in 1999, I'll say that again. In 1999, this stock was $135. It is now 2023. It is $142. Talk about a waste of money. Okay. So I do not own IBM in my long-term portfolio. A lot of people think, though, that these next couple of years could be kind of a breakout time for IBM. I'm not there, though. I'm not there. I own a bunch of other tech names that have much higher growth rates. But IBM is going to be important from just a sentiment. IBM is going to be important for just a sentiment play. Yeah, someone says great dividends. Yeah, I mean, it does have great dividends, but there's a lot of other stocks that have gone up 100, 500, 1,000, 2,000% from 1999 that also pay really good dividends. This has just been a value suck for the last 2 decades. And if all you're collecting is a couple percentage points of a dividend, you're drastically underperforming the market every single year. So it just has not been a good stock to own for shareholders, no matter how you look at it. There's been such a long list of better things to own in the long run. But listen, some analysts think that the next 1 to 2 years could be a breakout time for IBM. We'll see. I don't own it yet. I don't really have any plans on owning it, but if that changes, I'll certainly let people know. I'll certainly let people know. You're looking at splits there. Pride Envy, you're talking about, there was a split in 1999. So you're not adjusting for the split price. You have to adjust for the split price. All right, you have to adjust for the split price. The high after the split is 139. That's accounting for the split. All right, I think that this is going to be important just based on sentiment. But there's just huge levels of resistance on IBM up here. Once you get into like the low and mid 150s, you get into the mid 150s. I mean, this is just look at that. Look at the level of resistance that's been here for the last several years. You know, just a huge level of resistance there. And then to the flip side, you have this huge support level down around 110. And honestly, you can play that range if you'd like. You know, if you were looking to trade IBM, I would sell it when it gets to 150s, and I would buy it when it gets into the 110s, and collect a dividend in the meantime, and just continue to trade that range up and down. And that's been the best way to play this range bound stock. It's been range down for many years. And I have no reason to believe it's going to break itself out of that range. But this will be important based on sentiment. Another one is going to be Boeing. This is actually another stock that I do own. I bought Boeing right in front of 100 back during the COVID crash during 2020. Stock is now, we were doing that on our live streams. Stock is now trading at $213. Stock looks great. You know, it's had one hell of a move here in the last couple of months. I mean, this thing went from 120 to 213 in a matter of, 3.5 to 4 months. It's been just a phenomenal move on Boeing. I think the upside here is going to be kind of limited to like 230. So if there is upside on the back of earnings, I would look for this level to be resistance for Boeing, and I would actually try to fade it. So if you do get like a pop on Boeing or something that takes you up into that 230, I would actually try to fade it off of 230. Okay, I would actually try to fade it off of 230. And that level is going to be too much resistance there for Boeing. I think too much resistance there for Boeing. All right. Lam Research is another semiconductor that's coming out. So you can couple this right with ASML. You can couple that with ASML. We have to welcome Alug Bamiga. I don't know if I'm pronouncing that correctly. Apologize if I am not. Welcome to the trial membership. So again, guys, if you want a shot at a free membership, we're going to give away a free membership tomorrow. Just join the trial today. Go to ttgthree.com. You'll fill out the application. You'll pay $3. We charge $3 just to make sure you're a real person. It is a one-time payment. There is no automatic upgrade. There's no recurring payment. There's no automatic renewal. It's a one-time payment of $3. All right. So we're going to give away a free membership tomorrow to anyone that joins the trial today. And then you guys can still trade with us, even if you don't win the free membership, for full 7 trading days. Experience what it's like being part of our platform. And also, if you'd still like to join us, even if you don't win the membership, we'll give you guys one hell of a crazy deal if you do want to join. All right. So Lam Research, this is another one. Lam Research actually has a really nice inverted head and shoulders pattern that I would like to talk about. And that is going to be left shoulder, head, right shoulder, neckline. All right. So you guys can see there's your neckline. There is your right shoulder. There is the head. There is your left shoulder. Right? And then there's your downtrend resistance line. You can see we have just poked our head above that downtrend resistance line here the last 2 days. So we have to see what happens there with earnings. If earnings are to the upside, that would confirm the break out of this inverted or inverse head and shoulders, and that would start a new uptrend. And if that starts a new uptrend, you could look for this thing could take you at least to 530. And that would actually be my target. My target would be 530. Why 530? We'll draw a line across 530. And I'm going to delete the neckline just to make it easier on your eyes. And you'll see this little double top resistance from May, June, and August. And that becomes your next target to take profit. All right. Hey, guys. Anybody have any questions? Those are the big earnings names for tomorrow. Those are the names that I am paying the most attention to. Those are the key support and resistance levels that you need to be following and watching. Anybody have any questions for me specifically? Or anything, any questions about specific? Oh, nice. Ed Terrell says, I just joined last week. Guys, join, learn, and listen to Mike. You won't be sorry. Thank you, Ed. I appreciate that, man. Welcome to the family. Glad to have you on board. What time are those earnings? So after hours are Tesla, IBM, and Lam Research. Before the bell is ASML, Abbott, NextEra, and Boeing. So half of those companies we just went over are before the bell. The other half are after the bell. So if you guys have any questions, we can grab them, throw them up on the screen, or I can address some of your questions. Why are bears so damn negative? Is it their personality or actually something they read very differently? I mean, it's not their personality. It's just their analysis of the data and the information that's in front of them. You're never going to have a market, Samurai Steve, ever, where every single person agrees. That's what makes a market. Someone thinks something's going to go up and someone thinks something's going to go down. You'll never have a situation where everyone thinks the market's going to go up and everyone thinks the market's going to go down. Ever. So it's not that there's something, why are bears so negative? And just because someone is bearish doesn't mean that they're always bearish. They can be bearish for right now, but they can be bullish next year. It's just their take and their interpretation. It's just their take and their interpretation of the data that's in front of them. I can look at a chart and I can give you all the reasons why a stock might go down, and I'll look at a chart and I'll give you all the reasons why a stock might go up. And then you're going to have people that are going to believe one way or the other based on whatever their interpretation of that data is. That's the market, guys. That's the market. So nothing necessarily wrong with the personality. That's just what it is. Any other questions, folks? You guys have any other questions specifically for me? Now's the time to ask before we do break. I heard something about bot trading. Is it real? And how do I recognize when it is used to stay away from these stocks? Quantum Cowboy, if you wanted to stay away from stocks that have bot trading, then you would trade a total of 0 stocks. There is computerized trading in every single stock that is listed on any exchange. 80% of all of the volume transacted on the New York Stock Exchange in any given day is done by a computer. So bot trading is extremely real. It's extremely real. Computers dominate the liquidity of the stock market. Lucina, we got to welcome Lucina to the trial. Welcome, Lucina. Welcome to the trial, Lucina. Best of luck, guys. Remember, if you are interested in winning a free membership to True Trading Group, join that trial now. We're giving one away tomorrow. Go to ttgthree.com, enter your name and email, fill out the application. If accepted, you'll be prompted to you'll be prompted to the checkout page. Well, you'll pay $3. It's a one-time payment. We charge $3 just to make sure you're a real person. We charge $3, guys, just to make sure you are a real person. There's no automatic renewal. There's no recurring payment. If you guys don't join after your trial, it just expires. You're never charged anything ever again. All right. All right, guys. Hey, guys, if nobody else has any more questions, do I see 25 basis points or 50? You know, I really don't think it matters. I honestly don't think that 25 or 50 basis points matters. I think what matters is here's what I'll say. It matters if they don't give you clarity of when they're pausing. That's when it matters. If Jerome Powell comes out and says 50 basis points, and we probably have about another 25 basis points to go, and they don't change their target, then it doesn't matter, in my opinion. Whether they do 50 basis points in January or at the February meeting, February 1st, and then they do 25 basis points at their next meeting and then pause, there is no difference than they do 25 basis points this month and then 25 at the next two meetings and then pause. In my opinion, there's no difference between those two things. So if there is clarity on the pause and they don't move the Fed funds target, if they don't move that target rate, then it doesn't matter. If they do move the target rate, then 50 basis points sends the market to the downside. 25 basis points would help stabilize the market. So it really depends on if they give you clarity of when they're going to pause. Like you had comments from Bullard last week that really rallied the market, and the comments from Bullard were that he expects 75 more basis points and thinks that 25 basis points. He basically said you're going to get 25 basis points for 3 more meetings. That's what Bullard said, basically. But he's just one member of the Fed. He doesn't set policy by himself. So, and the markets really rallied on the back of that. And that was on Friday. You had a really big extension. I'll show you guys in the charts. So when Bullard started speaking, the market did that. Okay, he started speaking at 1 o'clock. I'm not Waller. It was Waller. I'm sorry, Waller, not Bullard. It was Waller. But anyway, but whatever, it doesn't matter. But that's what the market. It was Fed Governor Waller. Not I kept saying Bullard. That's what the market did when Waller made those comments. You can see the big boost that the market's got once the market got some clarity of when they're going to be pausing. We got to welcome Linda and Tracy to the trial membership. Linda and Tracy, welcome to the trial. Good luck tomorrow, guys. Remember, if you want a shot at a free membership. Okay, if you want a shot at a free membership, you guys can go ahead and go to ttgthree.com, join our trial. We're going to be giving away a free membership tomorrow to anyone that joins our trial today. And like I said, even if you don't win the trial, we're going to give you a hell of a deal if you want to join the platform anyway. And then you'll be with us for 7 trading days, which means that you're going to be with us all the way through till next week. And you'll be with us for the Fed meeting. Can't ask for a better situation. So join the trial here today. Good luck. And I'll see you guys all in chat tomorrow. All right. That kind of wraps up our live stream here, folks. Appreciate you guys all being here with me. Make sure you subscribe to the channel. Smash that like button. Turn on your notifications. Make sure you never miss out on any of these live streams. We go live 6 days a week, Sunday through Friday. I'm always giving you guys golden nuggets of education, free lessons, trade ideas, market analysis, and commentary. I answer your questions, so you guys never want to miss out on any of these lives. Remember, go to TTGTHREE.com. That is TTG3 spelled out.com. Enter your name and email. Join or click, yes, I want this. You'll be prompted to fill out an application. If you are accepted, you will then be paying $3. It's a one-time payment. It is no automatic upgrade. There is no automatic renewal. It is a one-time payment of $3. And you guys can join us for a full 7 trading days. And if you do, you're going to have a shot at a free membership tomorrow. Thanks for joining me today, folks. Subscribe to the channel, smash the like button, turn on your notifications. Thank you all. I'll see you guys all in chat tomorrow. Take care.